Okay, let's go and now have a look at the first three transactions. And before I do that, it's also going to be really helpful if we update the opening balance on the inventory worksheet. That's something we could have done last time. Now, in the helpful information you see, as at the 31st of May 2013, you've got 157 computers on hand and they cost you $1,500 each. So if we go to the inventory workbook, we can put 157 computers at $1,500 each equals a total cost of about $235,500. The date, now the dates won't go green, but they might go another colour, 1 June 2013. I know. So there's the date, the opening balance. So I did say the 31st of May, but what you've got on the hand at the end of 1 month is what you have on the hand at the very beginning of the next month. So an important rule you'll find in accounting is the opening balance of one period, is the closing balance for one period becomes the opening balance for the next period. One other thing I would also highlight your attention to, in the last exercise I left for you to do the accounts payable subsidiary ledger, and I've just put in here those amounts, June 1, and you can see there now in there. So just make sure you've got these done. This will be opening balance. So let's come down 73. So if you haven't got these, actually I'll take that one. Yeah. If you haven't got these opening balances, just stop the video and make sure you get them up to date. Right, let's look at the first transaction. And again, can I recommend to you, go to the forum, let's look at the first transaction, and it works through that first transaction. So I guess your real starting point would be to go there and have a look at that. Unless you feel pretty confident with this material, and you can just work through here. So what are we doing? The first thing we need to decide is what journal the item goes in. Now, this is something we don't in fact cover under topic 4, so I'm just going to tell you this information to start with, and by the time you get to topic 4 you'll be really strong with it. We've got a choice of 4 special journals, and then there's always the general journal if it doesn't fit into that. Now, one of those special journals records credit sales, nothing else except for credit sales. Whenever we make a sale on credit, we put it in that journal, and that's what this is. We've made a sale on credit. It's referred to the sales journal. So let's put our first entry in the sales journal. Special journals, sales journals at the top. So June 1, account debited. Well, we made a sale to Fred Flintstone. So Fred Flintstone. Now what does account debited mean? Well, this means we're also going to have to update the accounts receivable subsidiary ledger. We've made a credit sale, and that means Fred Flintstone is also going to owe us money. What was the account number? We can see invoice number, sorry, was 241. Now, I did change here. This might just say ref or posting, and that's usually what's in there. But I just changed a few minutes ago, put in posting reference, just because that's the full name for it. Now, first thing we want to do is record the sales. So what are the sales? Well, we sold 17 computers at $2,100. So let's look at that. 17 times 2100 equals 35,700. But when we collect money from Fred Flintstone for this sale, we also need to collect GST on behalf of the Australian Tax Office. And as most of you know, that's 10% of what the selling price was pre-GST. So we divide that by 10. If we look at the total sales price, it's going to be 1/11. Now, what's the total therefore that Fred Flintstone owes us? 35,700 plus the GST. It's 39,270. Now, those 17 computers we sold cost us something. What did they cost us? Well, let's go to the inventory worksheet to work that out. So on the 1st of the 6th, 2013, we sold 17 computers to Fred Flintstone. What's the unit cost of those? Well, the unit cost was $1,500. That's what our opening balance was. That's some of this 157 that we sold. So our total cost of sales, total cost of goods sold, is $25,500. So let's update our inventory record. We had 157 units. We sold 17. That gives us 140. The total value of our inventory was $235,500. And we sold 25,500. That gives us 210,000. Now our average cost won't change, but we divide the 210,000 by 14, and that's our average cost. So inventory worksheet is now done, and we can also work out our cost of goods sold. Our cost of goods sold, and therefore our reduction in inventory, is 25,500. One other thing we could work out, and I'll just put these items over here, is our cost of goods sold percentage, and that will enable us to work out our gross profit percentage, which don't need to do until much later, but it's just good to get a sense of how this is. So our cost of goods sold percentage is going to be a bit under 80%, or a fair bit under, 71.4%. Now to find out our gross profit percentage, we've 1 minus that, and it'll be 28.6%. But again, we'll come to that a bit later. This is meant to be a graph that will update as you get things done, but it doesn't seem to be. So one other thing here is your special journal. So hopefully this is slightly updating as we go along. We'll come back. Here's your progress report, and we'll see how that's going. So special journals. We've got one further thing, posting reference. Well, here we need to post this to the subsidiary ledger for Fred Flintstone to record that he owes us more money. So subsidiary ledger, Fred Flintstone. Actually, I could say there's something I prepared earlier, but let's take it out and let's put it in again. June 1, and this is a sale. The posting reference here, this comes from the sales journal, and we'll call it S1. The sales journal S1, how much was it? Was Fred owes us $39,270. So we owed in total our opening balance plus any purchases less any payments equals 43,600. That's still going to be a debit. Now, to indicate that we have posted that to the subsidiary ledger, we come back here and we put a tick in the sales journal column. Well, in fact, we don't put a tick. That's what we used to do before computers become more prevalent, and now we put in a T to stand for tick. So put in a T to say, yep, we've posted that item. So that's our first transaction done. Let's do the next transaction. Now, first decision is what journal does it go in? So if you make a sale on credit, it goes in the sales journal. If you make a purchase on credit, it goes in the purchases journal. If you make a sale on credit, you also need to update your accounts receivable subsidiary ledger. If you make a purchase on credit, you need to update your accounts payment subsidiary ledger. Is there any change to the inventory level? Well, we're adding 20 computers, so the answer is yes. We're adding 20 computers, so we'll need to update the inventory. And are there any GST implications? Yes, well, we're buying these computers, and therefore we're also going to have to pay to Orange Computers a component for GST so that they can collect that on behalf of the government. So that is yes. So now let's do those entries, and firstly I'll do the inventory record. So the 4th My num lock is not working, so I'll go 04th, another keyboard, 062013. Quantity, we purchased, how many did we purchase? We purchased 20 computers for 1660 each. 20 computers, 1660. What's the total cost we paid for those? And remember, this is the pre-GST cost, 33,200. Now we need to update our inventory record. We had 140. We add to that 20, so we're going to have 160. The total value was 210,000, and we've added 33,200. So that's going to be 243,200. This time you can see the average cost is going to change. It was 1,500. We've paid a bit more for these computers. So we divide the total cost divided by the total units, and we see that our unit cost is now 1,520. Righto, let's now post this to the special journal. The date in the purchases journal, this one, June 1, and this was Orange Computers, I think. Terms, what are our terms of trade? I'll come back and look at those. Posting reference. What's the change to our inventory? Well, debit inventory equals 33,200, and remember we've also got to pay an amount to on GST, which is going to be 1/10 of this divided by 10. So the total amount we owe to Orange Computers is these two numbers added together. Now I'll point out one further thing to you. A general rule in journals is the debit comes first. Now we didn't do that in this case, and maybe we should have, just because we thought it might help you learning to line up the accounts receivable and the accounts payable. But generally you'll see that debits come first. Debits come first. Whenever you do a journal, debits are on the left and debits come first. That's one of the important things about debits. So remember that. Debits come first, even though in this case they haven't. Righto. What do we need to do still? Well, we need to post this to the accounts payable subsidiary ledger. So let me go to the accounts payable subsidiary ledger. Orange Computers, June 4. What's the posting reference? Will be the purchases 1. Now we've made a purchase, so that's going to increase, that's a credit. And again, we see here credit, 36,500. So we take the balance, we deduct from it any payments, which we've made none, and we add to it any purchases, which we've made. That gives us our new balance, 192. Again, we can see it's gone green, but really quite a pale green. Go back to special journals. What do we need to do? Posting reference T. It's a tick. Now let's also put in the terms. What are the terms of trade? They're explained in the Fred Flintstone transaction when you go onto the Moodle forum. But the transaction terms were 210 net 30. Let me write those in. 210 net 30. Now, what does that mean? Well, the N30 means we're expected to pay that within 30 days. If we pay it within 10 days, we'll get a 2% discount. So that's an incentive for us to pay it earlier. And that will only come into play when we make the payment. Let's look at our third transaction. Third transaction, we receive cash payment from Sporting Goods. So which journal does this go in? Well, it goes in our cash receipts. We've received a cash payment, our bank account's going to increase, so we've received cash. Will this impact on a subsidiary ledger? Well, Sporting Goods owed us money, they've paid it, we now need to record that in the accounts receivable subsidiary ledger that's been paid. Are there any implications to inventory? Well, there were when we made the sale to Sporting Goods and we recorded the change in inventory then, but now there's no inventory change in hands, it's only money. And the same deal applies with GST. Is there any GST implications here? Well, there were GST implications when we received, when we made the sale, we recorded GST, so there's none. There sometimes can be a GST implication when you get a payment, and it's only a small amount, but if you give a discount. So we've talked about the terms of trade, so we'll come back and we'll talk about GST. That event will come up later. So Sporting Goods, we now need to go to the cash received, special journals. Special journals, cash received, date, June, I've forgotten what the date was, say 7. Account credited, Sporting Goods. What's happened to our bank account? It's gone up $29,000 because they've paid us $29,000. What's happened to our accounts receivable? It's gone down $29,000. Oops, doesn't go in there. It's gone down $29,000 because they no longer owe us that. What do I need to do? I now need to go to the subsidiary ledger of Sporting Goods. Sporting Goods, subsidiary ledger. Oops, accounts receivable. Sporting Goods, June 7. Payment reference, this is CR1. It's a credit. Well, let me go back and emphasise that it's a credit. Credit, accounts receivable, $29,000. What do? We take the opening balance, we add any items that people have purchased from us, and we deduct any payments they've made. Gives us a closing balance of 0. All right, doesn't matter whether it's a debit or a credit. So that's the third transaction done. Actually, let's do one more transaction. Pay Orange Computers $55,700, check number 613. Right, $55,700. Now, let me just have a look. Subsidiary ledger, Orange Computers, $55,700. Well, it looks like it's part of that payment. Let me go back and have a look at the trial balance opening. And we see we owe $155,700. Make the assumption here that there's no discount applicable to this, because we just paid $55,700. So the date, I'm not sure it is, account. Oh, right, let me go back to the transaction. So it's going to be cash payments. So you've got one of each of the journals to start with. What will this impact upon? This will impact upon the accounts payable, subsidiary ledger. Will it impact upon inventory? Same deal as before. When we made the original purchase, it impacted upon inventory. Will this impact upon GST? When we made the original transaction, we also incurred a debt to the ATO, which Orange Computers was to collect, but that would happen in the original transaction. So pay Orange Computers $55,700. Orange Computers, check number, I'll go back and look what that is later. Accounts cash at bank, well, it's gone down by $55,700. We've paid Orange Computers $55,700. Now we need posting reference here. We go to the subsidiary ledger, Orange Computers, June 7, I think, but it is a cash payments one. It is an amount of 55,700. So what's our balance? Our opening balance, deduct anything that we've paid, add anything that we've purchased, gives us a closing balance of 136,520. Credit. Back here, special journals, that is a T. Now, check number, let's find out the check number. Transactions, check number 612. This will be particularly relevant later on when you come to see the bank reconciliation. And you can see here that they have in fact cashed that check on the 11th of the 6th. But again, that's something we'll look at later. Check number 612. It was June 7, I think. Righto. That's been a bit over 20 minutes. That's got us 4 transactions. It's got one of each of the 4 special journals. So if you want to go ahead, it will give you some sense of dealing with the other transactions as they come along. And I suggest really that you do go ahead, see how you go before I put up the next video. Bye.